Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio. Today we're going to talk about some technicals on the charts of gold that look really good. But first, we wanted to point out something we found in one of the newsletter subscriptions that we pay for, some analysis. The topic was, guess, Russia, Ukraine. And the points were that things were happening with, the Western world uniting against Putin, and even mentioned him getting stripped of his black belt, which I thought was kind of, just a display of taking action against the guy. And what the newsletter pointed out was that, they're going to lock Putin and Russian banks out of the SWIFT system. If you don't know what the SWIFT system is, you can look it up. It's, a messaging system for financial institutions transferring money. And if they lock, I think it was 7 Russian banks out of SWIFT, well, Putin may get mad and try to have a cyber attack on SWIFT. SWIFT has been hacked before. And something he points out is that when this guy opened a bank, he had to use Microsoft 7, which Microsoft doesn't even support anymore. So there's this antiquated computer system that's being used for this huge international bank transfer system. And if Putin attacks it, it's been hacked before. And if something were to happen with SWIFT being hacked, then the whole world would have chaos in the financial systems because so many banks use this, right? So it's not necessarily the point that that's going to happen. The point that we want to make here is that that type of information is now being told to a huge amount of investors through newsletters like this. So if investors are now putting this on the radar, markets move because of things that are anticipated. You anticipate interest rates going up from the Fed. Well, then the market reacts to it. If a lot of investors are now seeing this in paid subscriptions, that this is a threat to where they keep their money, what are they going to do? They're going to move their money. And I think they're going to move their money into tangible physical assets, at least a part of their money, to protect it. It makes sense. So whether actually SWIFT gets hacked or not, whether there is cyber war in other financial systems, the point is that this is now showing up in financial newsletters and people are reading it and are going to take action. So it doesn't surprise me that gold's gone up $100, $150 in the last month. And so segue there to technicals on gold.
Yeah. I'm going to shift from one Rob to the other Rob. I'm surrounded by Robs today in the studio. Other Rob, you and I had a conversation a couple weeks ago when we were looking at the interest rate chart compared to gold and the idea of what's the correlation between interest rates up and interest rates down. And I think our conclusion is there really isn't one. It's more about the attitude of the market. It's more about the information getting spread throughout the market. It's more about the opinion of the market. It's more about the fear, or what's the opposite of fear? Anti-fear?
Well, just
you're the English major.
Anticipation.
Yeah, let's call it anticipation. I like that.
What's being told that's a potential threat. So what do you want to do ahead of all these other investors reading this stuff? You want to remove some of your money from the system, get it into physical assets. We can help you do that. And so anticipation is what the market does, right?
Right. So we're looking at bank freezes in Canada, which was the topic of conversation until about 2 weeks ago. We're looking at international money transfer freezes between Europe and Russia, which could have none or could have severely detrimental effect to the SWIFT system, which is the international money transfer system in Europe. It's their version of the wire transfer system between the different nations within Europe and even over here to the U.S. and Canada and anywhere else. The anticipation, I think that's your point. You're not sitting here saying this is the next horrible thing that's going to happen that affects everybody.
Correct.
You're saying all of these things, it's a bullet point list of potential concerns that could end up boiling over. And when you're in something like the precious metals industry, you are working with a bullet point list of potential problems.
Yeah, Rob, I remember you years ago talking about, having some storage food and doing that type of thing. If we ever let you talk on the show, we'll get to you in a minute. But,
we're going to keep talking about you.
But, you prepared for potentially not having a supply of something, a breakdown in a system, trucks showing up to the grocery store or whatever. You took care of that ahead of time. And that's the point here, is that if you just have a lot of money sitting in a bank and in a system, it would be wise to be moving some of it into a prepared situation, into physical metals, so that may cause less of a disruption in your life.
Well, what we're seeing is a breakdown of trust across the
Absolutely.
board. Trust in our financial situation, trust in our leadership, trust in the currency, trust in world peace. And so many people feel comfortable and they're caught up in inertia because they can see a fixed value of their money in the bank. Doesn't
Right.
go up, it doesn't
They
go
like
down.
to see it.
They
I've even
like to
had
see it.
people tell me that. They like to see a balance in their checking account.
I've had the same conversation. Now, regardless of the fact that for every 100,000 you leave in the bank, you're losing between 10 to 15,000 a year in value. They don't really see it that way. They just have that comfort. And anything that happens to breach that comfort causes a problem. We talked about this a few weeks ago. We are not at the panic stage in the metals market. Technically, we have seen the technicals line up. We knew it was ready to move. Fundamentally, we can look at the money supply and the debt and know it was ready to move. But the wind in the sails of the gold market hinge out of Ukraine. That's what's the driving force. And that was the impetus for this move. Even though we were well prepared for that, the stage was already set. Now we're going higher. And the question has to become, how much higher are we going to go? And where is our support?
Yeah. And I think in other times in the last 20 or 30 years, we've had, with our company's business, we've had shortages in the gold market.
Oh, yeah.
Well, look at the situation that we have now, and look at, this type of thing showing up in a financial newsletter. And it doesn't take a lot of money to exhaust the availability of physical gold.
No.
And I think we're going to see that happen, which means you want to own it before that happens, because what happens is premiums go way up.
Well, they already are.
They already are. That's right. Silver premiums have been up for 2 years.
Mm-hmm.
I think that's going to continue to happen, especially with this type of thing showing up on a lot of people's radar now.
Well, it's a good point, too. It doesn't take a lot of money to move the gold market.
That's right.
Gold is a very, very small puddle in the world of liquidity.
So if you want to own physical metals as a part of your portfolio so that you have this disaster insurance, if you want to call it that, then do so now, because...
Well, it's just capital to me.
True.
It's forever
It's
money.
a savings.
Yeah, I mean, it's been money for 5,000 years. The next 5 years is not going to change that. And people just have to understand that all we're advocating isn't getting rich buying gold. It's just keeping your principal, keeping your capital secure, come what may. And then 5 years or so down the road, look around, see where you want to reallocate your gold capital if you need to.
Yeah, feel free to give us a call. We can talk to you about what makes sense in our minds. Miles, let's jump to the technicals.
Well, I don't know if anybody missed it the other day, but gold got into the 1970s.
Saw it, 1976 or so.
Sure did.
And big turnaround back there in a single day, obviously giant candle on the charts. But that was expected, and Rob and I talked about that last week.
Well, let me
with
stop you right there.
expected
On
reversal.
that same day, and it pulled back, it had like about $100 swing. Look at where the bottom of that candle was, like 1880.
Right.
That was the exact tip of the top of the November high, the previous high,
Yep.
1880. So it has back tested that. Now, could we go lower? Sure, but I'll let you continue there. I just wanted to point that out. That swing hit that previous ceiling,
Right. And
which now becomes the floor.
Well, and that
right?
swing was exactly what you were hoping for, Miles.
That's
I mean,
yeah, exactly.
The day
Talked about
Which
before
of
that
us,
happened.
let's be honest, Rob, which of us called 1880 after we got out of recording last week?
Well, you called 1850.
You called 1880.
I called 1890. But
Okay.
it's close enough for government
Yeah,
work.
I still think you work. We'll play by Price is Right rules, so you're closest. So it was nice to see that, but again, I'm always looking for reasonable pullbacks because, as Robert talks about often, I'm a gold buyer,
Absolutely.
and I don't always have all the money. So I like pullbacks because sometimes I have a little bit of money, and that's when I want to buy. An 1880 pullback is scary bullish if that's all we end up getting out of this, because gold is climbing again. We're pushing back into the 1930s again at this point.
It only just touched 1880.
Right, and no reversal whatsoever. I mean, single day, double day reversal, and that's about it. And we've exceeded those November highs. It's very likely that bottom, that last time we hit 1680 back in July, August of last year, that might have been it. That might have been this long-term consolidation, triangle wedge pattern, whatever you want to call it, Elliott wave consolidation, call it whatever you want. You look at the big charts, we only ever came back down to the 382 fib. That's scary bullish. We sat there for about 18 months. That's fine. And we're starting to get into legitimate confirmed breakout territory in gold. So I'm going to ask the question back because I don't know the answer that Rob just asked. Where do we go from here? What is our next high point? I mean, if we see gold keep marching up, the idea of breaking past the old high, it's not even worth talking about because we know it's going to happen. So what's the next number we're talking about, and who decides that? Does Putin decide it? Does China decide it? If Putin, Ukraine continues progressing, is China going to accidentally trip and have 1 million people fall over the Taiwanese border? I don't know.
Well, I'm going to avoid answering and throwing a number out there because as soon as you do, you end up being wrong most of the time. So,
and is it even relevant? The number isn't relevant, right? That's not why you buy gold.
Because we're headed a lot higher with the price of gold. I think that's evident. And now with the last week's action in silver moving up above 25, like we said a number of weeks ago, you're going to wake up, silver's going to be in the mid-20s. Here we are.
Yep.
And it pushed bullishly up through a momentum level. It's now pushed into like 25.50, 25.70. I think now silver is on board with gold. It's bullish.
Oh, yeah. And the catch-up in silver has always been great. I'm sure you guys remember what happened those last 9 months of the bull market.
Yes.
Back in, 2010, 2011, near the end of the bull market.
And you have these different things in other markets as well, where one market can confirm the other one. It's like the transports and the industrials. If one's going opposite direction and they're not confirming, then they're out of balance. But when they do confirm together, they typically move the same direction and continue. So silver's now in tandem with gold moving up.
Well, and if you look at that chart that we did a few months ago of money supply versus the price of gold, in 2010, 2011, gold had shot up way beyond the growth of money supply, came back down. Money supply kept arching higher. Now it's going steadily higher, almost vertical. And gold is still in sync with money supply. So we are not overvalued. That's what I'm trying to say. We're not overvalued in gold. We're not overvalued in silver. The technicals and the fundamentals are in play. Now we have the catalyst with a solid foundation, technically and fundamentally. Now we have the catalyst that people have been trying to discover what's going to cause it to break out. Well, now we know.
Yes, that's well put.
Yeah, and on the flip side of that, I would also argue continue to watch the equities market. It's not unreasonable, I would think, given political pressure, both to our northern border as well as what's going on in Europe right now. It is possible you could see continued growth into short-term safety assets or at least other international markets. It's possible both the Dow and the U.S. dollar as well as gold could all have bounces here. From a technical standpoint, I mean, the Dow's decline just looks like a dead cat bounce at this point. I mean, it really does look like a ball bouncing down a hill. So we may get it 35,000. Great. Doesn't really mean anything. We're still only halfway back up to where we were. So I'm not convinced yet that the Dow could continue its bull charge that it's been in for the last couple of years.
Well, I almost hesitate to bring this up with all the great news out there in the world, but, look at how quickly an investment in some kind of Russian stock or bond may just go away.
Sure.
You know,
I mean, look at the ruble dollar chart. If you even had the ability to convert back and forth, which you don't anymore.
And people have their money just tied into those things, maybe even pension money that they don't even have control over, or a mutual fund or whatever has this exposure. Look how quickly it can just turn to a low value, almost to zero. And I hate to say that it could potentially happen in other countries, even our own, in certain ways. But there is a vast domino effect with things like that when you get into war.
Well, just in the last month, we have seen the Dow on a 13-year bull market. That's really old in dog years. It now appears to be reversing, which is healthy. The question becomes, do we just have a 20% healthy correction and still maintain a bull market, or is it going lower? Don't know.
Yeah, and then finally, I think it's worth looking at the currencies because there's probably, with sanctions, with money transfer freezes, there's going to be a lot of currency valuation discussion, euro value, dollar value, Canadian dollar value over the future. The dollar keeps climbing. I will say, in my own little bubble that doesn't hear the news, dollar chart to me looks like we're looking at a short-term reversal back down. We've had 3 consecutive higher highs with declining RSI tops. That's called divergence, and I like divergence as long as it lines up with other things, and lo and behold, it's coming right into the 618 fib. So I would normally be expecting to see the dollar turn down from here. I will throw in the political economic side of things, which actually could cause the dollar to continue climbing just as a short-term safe haven if people pull up out of assets. But if people are pulling out of assets, where's it coming from? Probably the equities market. So point being, you're looking at a lot of volatility going forward. You're looking at currency volatility. You're looking at equity volatility. We're still talking about potential interest rate rises in March. So we could have bond and interest rate dependent assets volatile. And clearly we're already seeing, I don't know if you call single direction movements like we're seeing in gold as volatile, but it's moving fast. So that is pretty volatile in and of itself, even though it at this point is only going a single direction, and that's up. So hold on to your shorts. Don't get emotional. It may be a difficult 18 months, and make sure you're talking to people that can help you see things through clear glasses.
Well, if you have physical gold, I don't think you have to have much concern. You're not dependent on something. And we encourage you to call us to talk about what does make sense for your metals portfolio. Our number is 800-525-9556. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvaney Financial, our website, McIlvaney.com, and hit the subscribe button below. Thanks for listening. Have a great week.